Hi class, Professor Veerson. We're going to look at chapter 3 in our managerial accounting textbook and our PowerPoint slides. And this is really the beginning of what you learn in managerial accounting. And this is the part that's called cost accounting. Now, cost accounting is a subset of managerial accounting. Basically, cost accounting systems accumulate manufacturing cost for goods that are produced. And they do this, of course, so managers can make decisions for planning and controlling operations, and also for making decisions on whether they're going to charge a customer. In other words, you need to know what something costs to make in order to successfully know what to charge your customers. So there are two main types of cost accounting systems. Job costing, or job order costing that it's called sometimes, which is what we're doing in this chapter, and process costing, which will be done in a couple chapters. Now, job costing is where you have unique custom ordered products, typically relatively small batches. The batches can be unique, and there's easy examples would be airplanes, custom home builders, high-end jewelries, accounting firms, anytime you have a individual job. So for example, if you worked at Levi Strauss, you could have one batch for tents, one batch for Levi's, one batch for ties, etc. The other type of job costing system is called process costing, and that's where you have mass production, you have identical units, and you have this uniform production process. And then after the process, they will average the manufacturing costs with all of the units that are produced. So that would be something like a paint manufacturer, where you have these huge vats of paint that maybe in one process you add the different colors, and then you put in some turpentine in another process, and it goes from one uniform production process or step to the next. So these are the two main types of accounting systems. And as we mentioned, this is job costing, single units or small batches. And what you're going to do is we're looking to see what is the average cost. So each of these batches or units would have its own average cost, okay? Process costing is where you have these large quantities, where you have identical units. For example, computer chips. You kind of bake them in the oven and you put the electronic parts on it, and you may have 1,000 different chips for computer processing. Or you have like lumber, where you have, thousands and thousands of lumber feet. And so you have this more averaging where the costs are averaged over maybe thousands or millions of identical units. Okay, so in other words, job costing is you have unique specific types of batches or a small number of units. Process costing, you may have a huge number of identical units that go through a process. Now, the flow of inventory through the manufacturing, and we've touched on this before, but the idea that you purchase raw materials, you requisition into the work in process. When they're completed, you then move that inventory into the finished goods. And then, of course, when it's sold, it goes on the income statement in the cost of goods sold. And we've seen this now several times, but when we do the journal entries, remember this cost flow as you visualize how the journal entries go through the accounting system. Now, everything will start with what's called a scheduling production. So the manager is going to make a decision on the different batches, and the batches can either be custom orders where perhaps somebody has called up and they want you to make, let's say 1,000 pairs of Levi's or 100 guitars or whatever it is, or you have what's called stock inventory, which is different products that you sell on a regular basis, so you want to keep a certain amount of stock in there. So production schedules will indicate the quantity and the type of inventory that you're going to be manufacturing. Okay, so this would be a typical production schedule. You can see that we're going to need a certain number of cross trainers. We're going to have a job 604 for treadmill. Like we mentioned, here is going to be the quantity. There's going to be dates attached to it. We also got some custom jobs from the Chicago Bears. They want a certain number of treadmills. They want some stair climbers and some dates attached to it. So you get the idea. In other words, you have a production schedule that the manager makes up. Okay, so in order to start making these products, then you have to start off with raw materials. As you saw, the costs flow through the manufacturing process. You begin by buying raw materials, and this would be a raw material record where you're going to be buying the materials, and then you're going to be making sure that you record that they're in the raw material record. Now, the purchasing of raw material has a way of doing internal control, and that is you begin with a purchase order, and a purchase department issues this to suppliers to order any parts not in stock. So in other words, everything begins with a PO or a purchase order. Then you will receive that inventory or that raw materials in this case, and you get a receiving report. And the receiving report usually have what are called blind copies that are counted and recorded on the receiving report, so they later can be compared to the purchase order. Okay, along with the receiving report, you get an invoice that is a bill from the supplier, and now you can match the purchase order, the receiving report, what you actually got, and the invoice, what they're going to bill you for, and you can compare these amounts, and that way you can do internal controls to make sure that, first of all, they sent you what you ordered, second of all, that you received it and someone didn't steal it in the warehouse or it got damaged or some mishap, and then finally that when you're paying it, you're paying for the amount that you ordered and you received. So what we'll do then is each job will have what's called a job cost record. And on there, we will have a record of our direct materials, our direct labor, and our manufacturing overhead, which if you remember from the other chapter, chapter 2, those are the three costs that go into the production, okay? Each job has one record. Okay, it's going to show the number of units produced and the cost per unit. Okay, this way we'll be able to keep track of the work in process, which are the incomplete jobs, and we'll be able to keep track of the finished goods, which will be the completed jobs. So we'll get this information from the job record. Now here's a job record. It gives the job number, which is 603. The description is we're going to do 50 units of these elliptical cross trainers. And here's our manufacturing costs again, direct material, direct labor, and manufacturing overhead. And again, the number of units. Okay, now, in order to trace the direct material, and we are going to look for tracing the direct material, tracing the direct labor, and then we will allocate the manufacturing overhead. We take a look and see which of these are going to job 603. Okay, so it appears that all of this raw material goes to job 603. So we have $8,500 worth of raw materials that are going to go to job 603. So here's accounted for the 8,500, and this would be all of the raw materials that's been requisitioned prior to the requisition of this last amount that we just accounted for. Okay, so here on December 2nd, we got $8,500 worth. These are previous direct material requisitions. Okay, so that's direct materials. Now, here's the labor time record. So basically you punch in and out. Notice that job 603 is got 2 of them. The direct labor wage is $20 an hour, and it has 5 hours at one time and 8 hours at another. And so we have to account for basically $260. Okay, going back over this, take a look and we see this is the direct labor for December 2nd. And it shows some of the other ones, and notice it says etc. down here because there's a total of 500 direct labor hours. And 500 direct labor hours at $20 an hour is $10,000. So we have direct material, $40,000, direct labor, $10,000. Now, the tricky part here is now we're going to allocate manufacturing overhead, and that's very important that you understand. The indirect manufacturing costs will be allocated to the jobs. And allocating is just a way of splitting up or estimating the amount of manufacturing overhead that each job is going to divide up. Okay, so we're going to take a look and we're going to estimate how much are all of these indirect manufacturing costs. And notice one of the key things, we know that these are manufacturing overhead because here they use the word factory in every one of the descriptions. Now, it could have just said plant, could have said equipment, but there are certain terms that signal that it's manufacturing overhead. So these are just examples of some of the total amount of manufacturing overhead. And what we're going to do is estimate that manufacturing overhead and split it up between the jobs. Okay, so step 1 for allocating manufacturing overhead is we're going to estimate the total manufacturing overhead costs for the coming year. And that amount will always be given to you. Okay, and sometimes this estimate is called a budget. So we're given what we estimate is the total manufacturing overhead. Then we select an allocation base. In other words, what activity would most represent the activity that would represent how to divide up all of the manufacturing overhead? And the allocation base can also be called a cost driver, and that is also given to you. In other words, you're estimating the amount or the usage of this allocation base. Step 3, we get the predetermined manufacturing overhead rate by taking the total estimated or budgeted manufacturing overhead cost and you divide it by the estimated allocation base. This gives you our predetermined overhead rate, which in this job, we will determine what that is. I believe it's $16 an hour. And then step 4, we're going to allocate some of the overhead to each individual job. Okay, so we take the predetermined overhead rate, step 3, and then we multiply it by the actual amount of allocation base used on each specific job. Okay, if you're a little bit confused, this should straighten it out. Here's our job cost record. Direct materials, we directly traced it. Direct labor, directly traced it. Manufacturing overhead, we are allocating. And because the allocation base was direct labor hours, we took 500 direct labor hours. The calculation for the predetermined overhead rate, which we didn't show, you'll just have to trust me, that it was $16 per direct labor hour. And so the allocated manufacturing overhead is $8,000. Now we can add up all three of the production costs: direct material, direct labor, manufacturing overhead. It's 58,000. We divide it by the number of, in this case, it's the number of elliptical cross trainers, 50, and our per unit cost for this job is $1,160. Okay, non-manufacturing costs, remember the value chain. These are all the other costs that are not part of the production. So the total cost will include the production cost, but when they talk about total costs, they're talking about value chain costs. Non-manufacturing costs are assigned to products only for internal decision-making, never external. So we know that R&D, design, marketing, distribution, customer service, those are non-manufacturing costs, non-production costs, but direct material, direct labor, and manufacturing overhead are the production costs. Okay, now, sometimes you overallocate and sometimes you underallocate. So what does this mean? Well, this means that when you use an estimate, and that's what a predetermined overhead rate is, basically at the end of the period, you will know how much manufacturing overhead you actually used, because while you're allocating it to the different jobs during the period, you don't know the actual amount. It comes in periodically, like a utility bill or depreciation or all of the different indirect production costs. But at the end of the period, you will know what the actual is. And so you're going to compare the actual manufacturing overhead to the allocated manufacturing overhead to all the jobs. If the actual is greater than the allocated, then you've underallocated. If the actual manufacturing overhead is less than the allocated, then you've overallocated. Okay, so you can think of this sort of as a T account. And on one side of the T account this is manufacturing overhead. And on one side is the actual. And on the other side is the allocated. Okay, so again, when the allocated is less than the actual, then you have an underallocation. Okay, so that would be something like this, where the actual, let's say, has a balance of 100. That means you underallocated. In other words, the allocation part wasn't high enough, and so you underallocated. Now, there's nothing wrong with under or overallocating, but you can see now we have to make an adjusting entry to make a correction. So the jobs have been undercosted if the actual is greater than the allocated, or the jobs have been overcosted if the allocated is greater than the actual. So how do you make a correction? Well, for undercosted, you're going to increase the cost of goods sold. Okay, for overcosting, you're going to decrease the cost of goods sold. Okay, let's stop there and okay, class, so I had to pause it. I didn't want the video to go too long, so let me just kind of finish up with a couple more slides, and then I'll do a part 2 for this chapter. So this is kind of a summary of what we went through. We had our raw materials that we purchased, put it into raw material inventory. Then we have our work in process inventory, where we traced our direct labor. Here's our direct materials from the raw material. And then we allocated the manufacturing overhead by taking the indirect materials, the indirect labor, all the other indirect manufacturing costs, estimating it, having a predetermined overhead rate, and then allocating it to each individual job. Once a job is completed, then we move it over to the finished goods inventory, and when it's sold, it goes into the cost of goods sold. Okay, now I'm going to stop here because then I'm going to go through the journal entries, and then I'm going to work a few simple problems with you. So bye for now, and we'll come back with the second part in a few minutes.